Guys, it's Will here. I want to go through the charts as usual and the stock market, the different indexes, and if there's anything that can be purchased, anything looking good. So let's get into it. I keep repeating myself at this point, but if you've been watching my videos, we have this downtrend, which is pretty obvious. Like a lot of times people think they can't really trade stuff. It's too complicated, but it's really not that hard to see when you're in a downtrend, especially like on the weekly, if you go to weekly charts and stuff like that. But I've got, this is pre-market right now. It's about 8 o'clock, almost 8 o'clock a.m. So the nice thing with TC2000 is that you see the pre-market charts, you see the candle, you see the prices. You can go down to smaller, and it shows a gray section when you're in the pre-market. And I'm using TC2000 if you want to get a free trial or $25 off your subscription. Check out the link in the description below the video. So what you can see here is that we bounced off the 200 and came back down. And we also, there's a sort of a support at around this line here, and we've broken down below that. The price percent oscillator, or the MACD, the momentum is quite low here. So at some point you'll see a bounce. You can get, like, this was a bounce from a downtrend. There was a little bounce here at the 200 a couple times, and you get this bounce, and this lasts for, this was over a week until it hit the 200 and it continued down again. So you could get a bounce from here, somewhere around here, and then it'll go up and potentially bounce either off the 50 or at this trend line, this downtrend line. So you can do some short-term trades, relatively short, but you have to be cautious of this being a downtrend and you're just having a little rally within that downtrend. So it can be tempting to get excited when you see a rebound and everything's good now, but be careful. So we've broken down the support here, and like I said, we are extended a bit low, so could be a bounce at some point. S&P 500, same thing. We've just broken a support level really low on the momentum and the kind of the oversold. But oversold can last for a while, but you are heading down, and all these are similar. IWM, broken support in a downtrend. Dow Jones is just right at support, or this is Heiken Ash. You don't see the exact prices, but you're basically breaking or right at support and in a down trend here. And like I said, we are very low on the momentum here, so we should see there'll be a bounce of some kind. The VIX is what also you can look at. You're in an uptrend, you've crossed up here, but once you get up, you do tend to have a reversal. But right now there was a pullback and it supported at the 50, so that is different. That is something that shows some support. And if for any of these charts, if you go to the weekly, let's say Q, you see a downtrend, and it was almost, it was trying to get up and cross there, but it didn't make it. And this is a 50-week, and we're heading down. If you go to monthly, we're in a downtrend and we've crossed down. But you want to see it start to turn around on the weekly. So all these look really bad. So that kind of sets the tone for what kind of stocks or ETFs you might be looking at. But if we go to I'll just go to my tab where I have sectors. There's been a few good things. You've got the inverse of the bond fund TLT is called TBF. But it's kind of going parabolic at this point. So usually you want to get it where the MACD or price percent oscillator crosses or you know, some sort of 50-day cross, but this is going pretty parabolic here. This is the daily chart. There's been a few things. Hedge, which is interesting because when you look at the most of the stocks are negative. So, you know, it's not like it's an inverse fund or anything, but basically currency, the US dollar has been doing really well. You go to weekly, you can sort of pull back and see if you're getting close to some highs here. So it's looking kind of extended to me. If I click on my scan button, you know, from the previous run that we had, there's still things that are in an uptrend like energy. Staples was doing pretty well. You know, it could bounce off 50 or 200 here. But you know, it was been above its 50-day moving average. Wheat is as well, like it's coming, it kind of it's supporting it at the 50-day right here. So kind of resources, cotton, you know, they're all above their 50 and there's a pullback right now. And so there could be another move upwards after the pullback. So those are the ones that you want to potentially keep your eye on for, you know, continued uptrending things like corn. It is, you know, there is a negative candle here, but you know, you don't know what's going to happen. You wait for it to start to show strength. See after each of these pullbacks with the red candles that it, you know, that it continued. The other thing, like if I turn that off and I reverse, go for the end, there's a lot of things like China that have been just beaten down. A lot of the tech, a lot of the cannabis. If I go to a weekly chart, they're just in a horrific downtrend. So that's what I was saying earlier, like people think, oh, I can't buy stock, you know, I can't trade or whatever. But you see where momentum crossed on the weekly, and it's been down below the momentum the whole time, and a little bit of a cross here, but red volatility stops, just this unbelievable downtrend. Of course, you have the ARC stuff, which is just, you know, it sat here on the 50-week for a while, and then it just dropped again. So there's potential for tech rebounds. But, you know, it's not a great environment for growth stocks, but these things have been beaten down a lot, so there will be people at some point that will support it. So you want to keep your eye on those ones, you know. That's why I have these columns, 90-day, 30-day, 50-day, or 5-day. Because, like, I can sort by negative, you know, inverse performance. RK is down 113% in 90 days. I can find the worst things in the past 90 days. And those things you want to watch and see if they do tend to, at some point, recover. Because if you look at March 2020 and you have this drop, I mean, it doesn't look that big right now, but you see where the momentum went just below zero, and now we're way down here, comparatively speaking. So the other thing I have down here is relative strength. So I compare everything to the NASDAQ because the NASDAQ was the leader. I mean, generally, over time, long periods of time, it is the leader. So you can see you had this run where the line was above the moving average, and that's where ARC really pushed, and it was doing even better than the NASDAQ. But once you cross down and you're below, that means it's doing worse than the NASDAQ. So that's when you want to put your money, if you have any in the markets, into things that are surpassing the market. So, like if you look at, like, gasoline is down in the pre-market, but if you look at the relative strength, you can see how it's above this blue line. I haven't talked about relative strength too much. I think I've talked about it here and there, but I have that on the bottom. And when I look at things like energy, for example, you know, you see that it's above the 50 and going up. It's doing better than the NASDAQ. When you can just click on this thing here, this down arrow, and say edit, and this line symbol you can change. So I've got the NASDAQ, which is a Canadian NASDAQ ETF, but you could put like if, say, energy is like doing really well for a while, and you want to see if anything starts to surpass energy, you could compare it to whatever kind of the leader is at this point. But the other thing I do is sometimes I'll go and click on the 5-day chart just to see what's doing well. And it's obvious sometimes in the charts that I'll know this, but you can see that natural gas, the hedge, the oil, this is the oil exploration, this is gasoline. So it's all energy, and this is oil services. So all these are basically energy. And then you have that 20-year that I showed you, Treasury ETF. You have wheat, that's a commodity. Let's see. This is another commodity. It's got oil and gold in it as well. But on a weekly chart, a lot of these things just stay in really nice uptrends. So you don't have to do anything. If you're using weekly charts in Heiken Ash, you just kind of ride it up. Maybe you sell there and get back in there. Sometimes you might get back in at a bit of a higher price, but you're avoiding the potential for a big, huge downtrend. But this thing's just been trading upwards. Boat has been doing, on a daily chart, it had a pullback here and it's kind of stuck below the 50-day. So it needs some work here, but I'm just sorting by the recent gains. Cash cows, people say, oh, you want to buy stocks that are generating cash. I don't really like the looks of this when you have this jagged sort of up and down chart, but it's only a couple percent, but still. And utilities, people looking for utilities, but I don't really like the look of that either. Might be curling around a bit, but the markets aren't great. So once you kind of look at the markets to start with, and then I go into the sectors. So I think that's everything. Oh yeah, one last thing, I've said this before, but you can always take a look at inverse ETFs. So I have a watch list that I have, and you can see that like Bitcoin broke above the 50 and now the 200. The 50 is still a little bit below the 200, but if you can access Canadian markets, there's this inverse Bitcoin, and that I'm not saying you should buy any of these things, but I'm just saying that the chart looks really good there. So you have DOG, which is the inverse of the Dow Jones. You have SH, inverse of the S&P. So that's obviously looking good. And of course, you want to get in at the proper time, like right here when it crossed the 50, and after this little pullback. There's a little bit of a pullback a couple of days ago. And the last one is the NASDAQ, same short. And there's multiple 2x and 3x leveraged ETFs as well. So you could potentially do the inverse ETFs, but right now I'm sort of expecting a bounce. Like you are pretty high above the price percent offset. You're above zero MACD, and you've crossed over way back here, and you've been up for a while. So you never know when that's going to happen, but I am expecting, there will be a bounce. So you could potentially, instead of, if you're going to do inverses, usually you want to get them right early when they start that trend, like back here or at the 50. But if you're going to do the inverse, that would be a great spot to do it. But you can also buy a rally that's like what they call a bear rally. So anyways, good luck with all that, and we will talk to you in the next video. If you want to get TC2000, please check the link in the description below. I've also got a link to TradingView and some other things. I use TradingView for crypto and for a lot of watch lists and indicators and alerts and stuff like that. Talk to you guys in the next video.